So I get asked this question all the time. People who want to buy stocks and want to invest their money, they just don't know where to go, but they want to make a lot of money and they just want to make quick gains. All right. So here's the video that I'm going to address everything. Let's go. So on my channel and on my TikTok and everything else that I talk about, people like to get in there trying to learn how to make money literally overnight. They want to get rich quickly. And you know what? I'm the same. Let's not kid ourselves. We love to be rich and we want to be rich very, very quickly. But the thing is, you can't do that if you don't understand how things actually work in life. I mean, yeah, there are some jackpots that you can hit and you can do really, really well out of those and you can get rich very quickly. And if you have done so, if you found something, a gold mine, maybe you're lucky, like more power to you, mate. But I got a question today and they go, you know, I've got about $10,000. What should I do with it? And I want to invest. It's clearly not enough money for real estate. And crypto was certainly not a project that they wanted to get into and they thought it was a bit risky. You know what? Which I completely understand. You know, everyone each to their own. I'm obviously very bullish on crypto and it's something that I can hold for as long as I want. But this person really wanted to be rich overnight. I just told them, you know, if you're patient, you can probably make a pretty risk-free gain with that. This right here is a chart for S&P 500 since 1981 to 2021. It's done pretty freaking well. Around $128 to about 5,000, almost, you know, mid $4,000 is what we're looking at right now. That's pretty good, guys. That's 3,256.87% of all time since 1981. How long has it been from 1981? It's been about 40 years since 1981. Okay, what I wanted to do is just go through some numbers, right? I just want to go through and, you know, just really dig into what S&P 500 is. If you look at S&P 500 and the numbers that we see, yes, it has had some fluctuating returns over the years. But what we have seen is that it has consistently return of around 10% every year since its inception through to 2019. And its inception is actually dates back to 1920s. And since 1920 to until now, we've had 2 world wars, right? God knows how many pandemics that we've had, right? We've seen coronavirus, but it's recovered very, very quickly out of that. So overall, it's looking pretty good. What you must understand is that this person that asked me a question had a spare $10,000. They still have a job, and with that job, they're making income, and you know they can save money just like any other person. It was a single dude, so it's not like they have a family to look after or anything like that, right? So with that, what we can do is we can set him up with a starting capital of about $10,000, right? And we're looking at an annual addition. Well, I can't calculate annual addition. I'm just gonna go monthly addition. Let's say he saves $50 a week. That's $200 a month that he's adding to it, right? And at the beginning, and at an annual interest rate of 10%, because that's what we've seen across the inception of S&P 500. And we're going to be only investing into S&P 500, and we're not going to go do stock picking or anything like that, because we're not the guys, we're not the boys and the ladies of Wall Street. And after 20 years, we're going to see how much money they make on that. Check it out, guys. After 20 years, that $10,000 with $200 added every month becomes $212,000 in 20 years, guys, right? And the total principal that you pay down is only $58,000. That means you get $154,000 additional to your income, which is amazing. Now, this is where it gets really exciting. Add another extra 30 years to it. Guess what the number will be? It more than doubles, guys. And that is entirely possible. So what happens if you held it for 40 years, saving $200 a month and adding it to this fund? You're going to end up with a whopping $1.5 million in 40 years. So if you're watching this and you're in your 20s, right? In your 60s, you're going to have $1.5 million in your bank account. Now, this would not be your only investment. I genuinely don't think so. If you're chucking $50 away a week into this project for the next 40 years and you got $1.5 million in 40 years, you probably have other income and you could probably buy assets along the way and you'll have income along the way. Not to mention you can collateralize this asset to actually purchase other assets as well, like property. And this is a pretty much a risk-free way to do it, because you know why? Because this return rate right here has stood the test of time, as we have seen. Not to mention in the last 10 years of S&P 500, we are seeing some pretty crazy returns. Not to mention this year alone. This year alone on S&P 500, we are up 16.53%. And we're looking at an even higher high by the end of the year, guys. So these things can happen. You might say, oh, but it dumps and it happens all the time. Well, you know what? I'm just going to look at the entire picture. All right, there we have it, guys. 2002, well, basically that's like the dot-com bubble era right there. 2008, that's basically global financial crisis. We had another dip around the coronavirus, guys. These are some notable mentions right here, but guess what? It just keeps beating it. So there's really no point timing the market with this investment. It's not about timing the market, but it's actually more about time in the market. How long have you stayed in the market to actually capture that growth in the period during which you've actually held the asset? So overall, the best thing to do with stocks is that, you know what, you don't time it. You just hold for a long term, you set and you forget about it, and you create generational wealth. That's what you should be doing. You might say, oh, but I'm too late, I'm too old for this stuff. You know what, do it for your children. Another thing that I suggest people do is when a kid is born, do it for that kid. Put $200 away every month for that kid until they turn, I don't know, 14 years of age. By the time they turn 14 years of age, teach them how to make and invest $200 a month, right? They can work at McDonald's, do whatever they need to do, carry that forward by the time they turn 18. And from their 18 years of age onwards, they can then contribute whatever money they wish to do to this fund. And by the time they hit 40, if they kept up with that $200 investment per month, they would end up with at least $1 million in their bank account by the time they're 40, which everybody knows is a very, very powerful amount of money to have when you become 40 years old. And this is external to any other job or financial activity or investment that they'll be doing as well, which is fantastic. At this point, you might say, well, you're an idiot, Hundo. You know, you don't really, there are stocks that you can pick that will, 100x overnight. Well, yes, you're right, but I'm not an expert, right? And you know what? Nor are anybody else. A lot of these hedge funds out there that are saying, they can do it. Any monkey can beat the market, guys. So, this was an experiment where a monkey was used to like throw darts at a wall and basically bought a bunch of things that it landed on. And it was pretty random. And, there was no real statistical correlation between hedge funds that were promising really big gains, and it wasn't particularly consistent. So the best thing to do for you as an average Joe investor is to just mirror the market by investing into the S&P 500, which obviously gives you the top quality stocks, and you can get a little gimmicky with it as well if you really wanted to. But overall, do this one thing for me, guys. If you want to invest in some money, go to this annuity calculator website and play around with what you can actually budget, right? Have an understanding of how much money you actually make and how much money out of what you make can actually be invested into an index fund like this one, which is quite passive, pretty risk-free, and over a long-term period, you're going to be making quite a lot of money as well. I mean, if you change some of these parameters, you will see that you actually really amplify your money over time. And the biggest factor that impacts the cash that you have, the capital that you have, is going to be time above all else, guys. So be patient is the moral of the story today, guys. Of course, you will have your wins here and there, and you can do different things to increase your income, like e-commerce. You can set up your own business, you can invest in yourself, you can grow your skill, all that kind of stuff. But this is pretty straightforward, guys. So make sure you give this a bit of an investigation and see what kind of results it may yield in 40 years time. And maybe then you'll think of me and thank me then. But if you aren't going to do that, at least go and follow my social posts. Make sure you go smash that like button for the YouTube algorithm. Thank you so much for tuning in today. Make sure you subscribe and ring that notification bell as well. Peace out.